I think it's, it's important to kind of regress to the median, like as they say, like those upper properties at the 1.5, they're going to be affected the worst in these cuts and above that. And we saw that, especially the eastern suburbs of Sydney when they struggled the most. And we saw the west actually perform a lot better than the east. And like as you said, a great word was, affordability, but not total numbers. It's not like, okay, $500 is
Yeah.
the rental or mortgage that we're accepting, and that's our baseline. No, every area and every market is completely different. Like a place like Perth, probably per capita has more richer postcodes because of the mining and because of the type of jobs that it has, right? But in total figures, you can find properties much cheaper there than you can in Sydney. So it's not exactly like that word for word, as you said. And with the tariffs and unemployment, right? We're actually going through a conference with CBA today, and they were going a bit deeper on the economy side of things and kind of explaining about the tariffs and how much of an impact that CBA are actually preparing for. And really, all eyes are on actually China, not really the US, right?
Mm.
Because our employment is really good right now. As
Yes.
you said, if that changes, then maybe unemployment goes up. But for what it is, it's really, really low, right? That 5% of we're directly impacted by these tariffs to the US. The bigger partner that we have is China. So if US and China go to a trade war and a tariff war, which we still need to pay attention to, China is the one that we're worried about. So we need to worry about how well they perform and how well they do because of how much we actually export to them. And that can really impact markets as well. So as you said, that 1.5, those are the ones that might be the risky ones, right? And in terms of investors, it's super rare that we would even recommend something like that, right? Obviously, it's case by case.
Mm.
But as you're seeing, that 500 to 550, it is going away,
Oh yeah.
right? And
Yeah.
if you look at the stock market right now, I cannot name the amount of companies that said that they performed really well, really poorly, sorry, and their sales are down, but all their stock prices have gone up. And that's a clear sign that there's just so much money in the market and
Mm.
there's just so much supply in the cash market that even with these rate cuts, it's only going to explode these properties. It's only going to push things even more pressured for people. And there's nothing really changing that's going to make it easier, right?